guys, the next deal that we're going to take a look at is in East Charlotte. It's actually 128 units and 80 units. So we have two assets in one acquisition, a total of 208 units. So these two assets were acquired in 2022 by a Texas-based syndicator. So the purchase price on these assets were about $32.9 million. So that equates to about $158,000 per unit. So any syndicator, any private equity firm, or any owner-operator that acquires multifamily property always has a business plan when it comes to execution. And this syndicator, their particular plan was the classic value add formula. Right. So what that looks like in this scenario was that they wanted to upgrade the interiors and amenities. They wanted to push rents up year over year. They wanted to increase the occupancy, right, at the same rate. And then ultimately they were looking to either refinance or sell once the net operating income improved. So what are some of the outcomes? What actually happened? One is that this syndicator may have overpaid for this asset. So they paid $158,000 a door for 1980s build and a Class C asset in East Charlotte. So number two is a common theme that we are seeing all over, right? They financed this acquisition with floating rate debt. So their monthly debt costs surged anywhere from 40 to 70%, entirely wiping out their cash flow. And number three from our research findings is that they had some operational challenges. So the renovations stalled, deferred maintenance grew, and tenant turnover spiked as well. So this ultimately resulted in default. So in 2024, both these assets defaulted on their loans and ended up in foreclosure. So I'm gonna leave you guys with some takeaways today. So number one, do not overpay in hot markets. You have to underwrite conservatively. And number two, execution is everything. Property management is what separates the winners that win big and the losers that fail miserably in this apartment acquiring landscape.